Future corporation tax, I think, is a real problem, actually. The problem is, I think we need fundamental reform, and without fundamental reform, corporation tax has no future. I think that's illustrated really by the fact of whether we think corporation tax is compulsory or voluntary. Most of the debate which has been going on, around multinational companies has effectively assumed that it's voluntary. We call Google into the Public Accounts Committee and we berate Google for not paying enough tax. Tax is supposed to be compulsory, so why don't we have a tax system which tells Google exactly how much they should pay? If they don't pay it, they get into trouble, the chief executive can go to prison. Actually, we have a tax system where it's not at all clear how much tax Google should pay in this country. So it's voluntary. Where are the problems then? The problem is not really with the multinational companies, the problem is not with HMRC in collecting the amount of tax, the problem is in the tax system itself. And the tax system itself is so complicated, so inherently arbitrary, and so prone to competitive forces between different governments. So that's driving down tax rates. It's both driving down tax rates and it's making it easier for companies to shift profits around between different countries. And ultimately that's got to reduce corporation tax takes in terms of revenue. The only way of really combating that is really to go back to fundamentals and think, okay, what would a more sensible tax system look like? Just closing existing loopholes will not be enough. Interesting question. I think we can do it in a number of different ways. I think the starting point is to say, well, what would be a reasonable thing to tax? So at the moment we try and tax multinational companies by and large, where they make their profit. The real problem is, where do they make their profit and how can we identify that? And part of that is that we're trying to tax them on the activities which are really quite mobile, so they can move them quite easily. So I think the starting point is to think, what element of the multinational company, if we're trying to tax multinational companies' profits, what element of that is relatively immobile that we might actually stand a chance of taxing? And I think the obvious answer to that is we can either go back to the ultimate shareholders of the company, who are individuals who are less mobile at least than other parts of the multinational company. We can move right to the other extreme and look at consumers, where multinationals actually sell their products, because that depends on where consumers are. So ultimately, my case would be individuals are less mobile than kind of what the company does, and we should try and think about taxing corporate profit there. Now, we could think about trying to do that a little bit more within the context of the existing system, or we could think of it kind of more in terms of tearing up the existing tax rules and starting again. But I think that's the direction in which we have to think about. And unfortunately, I think the tax debate is not going in that direction. The tax debate is going in, how do we fix this tiny little bit of the problem? How do we deal with risk? Or, how do we deal with cost-sharing agreements and so on? And it's not really asking those fundamental questions. I think we need to look longer term. We need to, and really start again. I think we need to ask the questions, why are we trying to tax multinational companies in the ways that we currently do? Why do we tax an American company which has an operation in the UK, which is owned by Americans? It's not because we tax Americans on their income, that's because we're taxing activity which is taking place in the UK, so why do we do that? So I think we need to have those kind of fundamental questions answered first before we can then design a tax system.